Last week, Wall Street seemed to receive everything it could have wished for. Steady interest rates, a dovish stance from Powell, and the long-awaited cooling of the labor market, leading to a surge of over 5% in the major indexes. Looking ahead, it will be quite challenging for the new week to compete with such success. The macroeconomic calendar is sparse, and market sentiment is likely to be predominantly influenced by Federal Reserve officials. Analysts at InstaForex are ready to present their vision of the trading prospects. Welcome to a fresh review of the US market, dear traders. Let's start with the market recap as usual. On a Friday, the SP 500 and the Dow Jones indexes extended their winning streak to 5 sessions, while the Nasdaq outperformed, closing up 1.38%. The benchmark S&P index, as predicted by our analysts, exhibited a more restrained advance, adding 40 points or 0.94% to close the trading day at 4,358 points. The pre-market mood on a Monday retained a note of optimism, albeit a subdued one. Index futures edged up a modest 0.2 to 2.12% ahead of the opening bell. As for the trading outlook, the S&P would require another significant catalyst for further gains. Given the sparse macroeconomic calendar and the schedule of reports, the likelihood of such a catalyst emerging today is slim. The benchmark is expected to hover in the range of 4,340 to 4,370 points, with the most optimistic scenario projecting a rise to 4,376 and then to 4,398 points. Signs of a slowdown in the United States job growth and an uptick in unemployment have bolstered hopes that the Federal Reserve may have concluded its interest rate hiking campaign. The Department of Labor report indicated that in October non-farm employment rose by 150,000, significantly below the expected increase of 180,000. The unemployment rate edged up to 3.9%. And this has instilled confidence that the Federal Reserve will leave policy unchanged in the foreseeable future, with the rate hikes resuming only if inflation accelerates sharply. Employment data also contributed to a fourth consecutive session of declining yields for U.S. Treasury bonds. The yield on a 10-year Treasuries fell to the lowest level in more than 5 weeks. Against this backdrop, the majority of the 11 key sectors of the SP 500 index advanced, led by the rate-sensitive real estate sector. The sole laggard was the energy sector, which fell more than 1% over the day amid a decline in oil prices. For the week, the S&P notched a 5.9% gain, marking its largest increase since November 2022. Monday's pre-market session proceeded in a much more tranquil fashion. Futures on stock indexes exhibited moderate optimism, signaling that the equity market has entered a lull, with the week contributing to this quieter mode. For futures markets, it seems that Federal Reserve's play is conclusively over. According to the Fed Watch tool, traders are placing a 90% bet that the Fed will keep interest rates steady in December, while the probability of a policy easing as early as June is around 80%. Such expectations will be tested this week by a series of Federal Reserve officials, including Chairman Jerome Powell, who is set to speak on Wednesday. This appears to be the week's main event, given the sparse macroeconomic calendar. In addition to Powell, other voting members like Federal Reserve Board Governor Lisa Cook, New York Fed President John Williams, and Dallas Fed President Lori Logan will take the microphone. Traders will have the opportunity to gauge Lisa Cook's stance as early as today, and her speech is supposed to be the day's main event. In the currency market, as the U.S. trading session approached, major pairs cooled slightly from intraday movements. The dollar index dipped 0.2% to 104.85, its lowest level in 6.5 weeks, but later recovered to 105. In terms of the trading outlook, we believe that dollar will continue to seek stability around the range from 104.80 to 105.20. The US dollar index continued its decline on a Monday, following a 1.4% fall last week. However, a slight rebound in the yield of 10-year Treasury bonds lent some support to the index. Both bonds and the dollar index experienced significant dips following the softening rhetoric from Powell. Weakness in the U.S. employment data and softer industrial production figures dealt a substantial blow, but the market has already digested this. We believe that for a sustained sell-off of the dollar, signs of improvement in the Eurozone and other strong economies are required. Additionally, the dollar may still receive support from Federal Reserve speakers, although this possibility seems tenuous. Meanwhile, the Canadian dollar managed to make a sharp rebound from its annual low of 1.39 last week, thanks to a broad sell-off in the US currency. The USD-CAD pair started the new week somewhat lackluster, essentially marking time around the 1.3658 price level. The trading outlook is framed within the 1.3640 to 1.3690 range. Despite the looney's recovery, domestic macroeconomic indicators continue to suggest that the Bank of Canada may have reached the end of its tightening cycle. The country's unemployment rate rose to 21 months high. Moreover, wage growth continued to decelerate, and the increase in employment was less than expected. All these factors are weighing on the Canadian dollar, but the depreciation of the US dollar has offset the negative impact of this data. Today, the loonie may receive some support from the rebound in oil prices, following the largest drop since August. The cryptocurrency market appears the most animated today, although the core assets are not updating highs and they are trading in the green zone. In terms of the trading forecast, bulls will attempt to push the #1 cryptocurrency towards the $35,100 mark. If it consolidates at this level, the asset may progress towards $35,300 and $35,550. The alternative scenario suggests a dip to $34,800 and $34,505. Today, the buzz and anticipation were fueled once again by talk of a Bitcoin ETF. Julie Long, the CEO of the Hong Kong Securities and Futures Commission, stated that the city is considering giving ordinarily investors access to spot Bitcoin exchange-traded funds. And with that, we wrap up our daily market overview. If you have any questions, I would like to share your views. Please comment below, and we are always open to feedback. Don't forget to subscribe and enable notifications to stay informed about the latest trends and shifts in the market. Wishing everyone successful trading, and we look forward to seeing you again on our channel.